Rolls-Royce as a company has previously been bankrupted and it's been nationalised. Could you believe that?
It's got a market cap of around 93 billion. It's completely turned around and they've actually superpowered in the last 5 years. And the share price is up 2,500%. And they've achieved a compound annual growth rate of 91% over that period. And just one of these modular reactors provides enough low carbon electricity to power 1 million homes for 60 years.
The target is by 2025. Within that 2 years, they save 1 billion.
Welcome to the latest edition of the Intelligent Wealth Podcast. As usual, I've got my two great co-presenters with me today. One is Awet, who is the head of research at our fund management company, Minerva Money Management, and Carl Roberts, who is a fellow director. I'm Tony Byrne, the managing director. We're all familiar with the famous name Rolls-Royce. We always envisage this fabulous car that's got the most smooth ride. We've all probably experienced it if we've been to weddings, for example, either driving in the car or seeing the car. Interestingly, today, we're not talking about the car at all. I just thought I'd introduce it because it's quite interesting. I watched an interview with Piers Morgan and Cristiano Ronaldo a couple of years ago. And at the time, Cristiano Ronaldo had 22 cars, 2 of each make. And Piers Morgan asked him what was his favourite car. And I was really surprised when he said Rolls-Royce was his favourite car. Being driven in a Rolls-Royce, I must admit, it's the smoothest ride I've ever had in a car. It's absolutely a dream car to ride in. Anyway, Rolls-Royce, the original company, was formed as a partnership between, would you believe it, 2 men whose surnames were Rolls and Royce. So it's not really surprising, is it? So they formed this great company, Rolls-Royce, but we're not talking about that company today because the Rolls-Royce manufacturing company is now owned by BMW. What we're talking about is the engineering company, Rolls-Royce, which is most famous for creating these aircraft engines in the aerospace industry. And it's more of a company that's in really 3 areas now. Aerospace, as I've just mentioned, it's in defense and power. And this company is going through a bit of a renaissance at the moment. It's performed very well the last couple of years. We're going to go into more detail later on in the program. But I do think it's interesting to also note that Rolls-Royce as a company has previously been bankrupted and it's been nationalised. Could you believe that? So it survived some of the most extreme conditions in the past and still surviving and now thriving today. We usually talk about the owners having what we call skin in the game. So in other words, the shareholding of typically 10% more. We prefer those companies because we find companies which have visionary founder owners tend to be better run than companies that don't have that. Having said that, there are some exceptions where the company is so well run by good management that it's equivalent to a visionary founder owner with skin in the game. The 2 main people to talk about today is the CEO. I'll just read this carefully. Van Ergin-Bilgich and Helen McCabe since January 2023. These 2 own just 1.4 million shares that are only worth £15.5 million. I wish I had so few shares worth so much money. Now, I think not to do down Helen McCabe, but Tuffan is quite an interesting character. He's got 20 years engineering experience. He led BP's downstream business to record profitability and safety performance. And he's got lots of experience in infrastructure industry. So there's been a noticeable improvement in management since he's held this CEO position. So I think it's in no small measure down to him, but I'm sure the team have made a big contribution, including Helen as well. So unfortunately, there isn't much skin in the game. But as you'll find when we discuss it with Carl and Awet, we'll go into more detail than myself, you'll realize that currently it's a very, very well-run company. So without stealing your thunder, Carl, let's pass it over to you to get into the figures a bit more and the meat of it more.
Yeah, thanks, Tony. So Rolls-Royce Holdings is the correct title, and the company we're talking about here uses the ticker RR, listed on the London Stock Exchange, and It's a member of the FTSE 100 club. So it's unusual for us to be talking about a UK company because quite often on this podcast, we're dealing with US companies, mainly US tech companies. But yeah, so it's nice to cover a big traditional UK company. It's got a market cap of around 93 billion. And its origins actually date back all the way to 1884. So it's been around a long time. In terms of share performance over the last few years, I'm not going to go all the way back, but if we just look throughout the 1990s and into the early 2000s, the Rolls-Royce share price didn't really do anything, stayed fairly flat during that period. And then from 2003 to 2014, aerospace in particular really took off with strong demand, particularly from the emerging markets. And over this period, from 2003 to 2014, the Rolls-Royce share price went up and achieved a compound annual growth rate of around 31% that period. So pretty decent returns there. But then at its peak in around 2013, it then fell significantly all the way to 2020. So the actual share price fell around 90% during that time period, which is a compound annual growth rate of minus 28%. So it went from one extreme to the other effectively. And what happened during this period? Well, there was lots of different reasons. They had big problems with one of the engines they designed around the time. It really didn't work out and they made massive losses on that. They got caught up in big corruption scandal where they were found to be dealing in bribes with a few countries. So they saw significant fines for that. And then they had a really poor balance sheet going into COVID. And COVID hit them really hard because essentially aerospace just crashed and there was just no flying or anything going on during COVID times. And they just were not prepared going into that period. So since their low in 2020, it's completely turned around and they've actually superpowered in the last 5 years and the share price is up 2,500%. And they've achieved a compound annual growth rate of 91% over that period.
Wow.
Sorry, 90%. It's actually up 91% just this year alone, the share price. So there's been a big turnaround. Management have been very successful in turning this company around. They've reinstated dividends. So the dividend yield is quite low at the moment, under 1%, but they've reinstated dividends. They've done share buybacks. There's obviously been a big recovery in the civil aerospace industry post-COVID. And also, importantly, growth in defense contracts, which they're big in as well. So, yeah, the company's kind of completely turned around in the last 5 years. One of the reasons why we want to cover this company today and what we're quite interested in when we're looking forward is their the area of small modular reactors. So Rolls-Royce are in this market, build small modular reactors, and these could be crucial for solving the energy problem going forward, particularly if Western countries are going to continue down this kind of green path and want to obviously reduce carbons, which seems pretty baked in, although some of the measures are being kicked down the road a bit now. Because essentially a small modular reactor is sort of a tenth the size of a normal kind of nuclear plant. It's still a fairly large bit of kit. When I think of a small modular reactor, I always thought, well, it must be a little machine that they just put into a factory. But actually, it's still 3 stories high. The actual site itself could cover between 1 and 2 football pitches. So it's still a big bit of kit. But importantly, it can be assembled on site. It can be delivered in trucks, put together quite quickly. And just one of these modular reactors provides enough low carbon electricity to power 1 million homes for 60 years. So it's a significant bit of kit. And what's interesting about Rolls-Royce is they've now got the UK's contract effectively to build these throughout the UK, which makes it really interesting. Their actual version of the small modular reactor they've built is slightly better than others on the market, produces more energy than others. So that puts them kind of ahead in terms of that. So yeah, so there's a lot going for them in terms of looking forward, and that's why we're quite interested in it. And I think, Howard, you've got more to say on this.
Yeah, thank you, Carl. Yeah, historically, as you mentioned, Tony and Carl, this business has been in is an oligopoly, only like 3 players in the market. So it should have done really well for new investors. But as you mentioned, Tony, earlier as well, it just went through so many things and it just has like very poor cost contracts, weak cost control. and has been inconsistent with execution. I think what was interesting is in the last 2 years, the new management has completely transitioned the company in terms of like there was they had a lot of bureaucracy, so they had to remove a lot of more than 2,000 jobs, and they had to do a lot of cost saving. I think the target is by 2025 within that 2 years to save 1 billion, and I think that's why they are becoming very profitable and investors quite interested now. Suddenly, the company is becoming quite attractive. So the reason they've done that is pretty much, like make the company very lean and selling the business that were not profitable or they had no synergy. They have sold it to some US companies and so on. So management has done a great job turning the company around. And I think that's why investors are optimistic because, as you mentioned, historically, this company has been not executing well and has done, if you were an investor, you pretty much didn't make money apart from the last 2 years. So yeah, it is doing really a great job now, I think, and they are diversifying the business as well. As you mentioned as well, Carl, during COVID, the company has gone through a lot of, because there was no flight and they had to raise money and so on. They had to go into debt and just there was no appetite for it from investors' perspective to invest in Rolls-Royce. So, but now there's a lot of great things going for the company. As we mentioned, like the geopolitical risk is rising. Europe is increasing defense, mostly not just the Middle East, but Ukraine as well. And I think they recently been awarded 9 billion contract from the UK, US, Australia and US and UK, deals and so on. So the company is growing, the backlog is growing. And I think that's why investors are optimistic and they can see the visibility of the revenue, especially was in defense, is actually 4 years ahead. So you can see that defense is booked for 4 years. That's worth almost 19 billion. So there's a great things going for this company so far. And I think management are doing the right thing. So which is, I think what you want to in a company is management, execution. I think the key thing is, I think there's a saying like in property investment, the key thing is location, location, location. And investment as well, you just need execution and execution. I think management has shown to execute really well. And the company has really good track record historically. In terms of submarine, they have been building submarine for the last 60 years. So they have the experience, the R&D, and everything going for them. The one thing was missing was the execution. And I think now they have the management to do that. And I so far, they have proven to be doing a great job. And I think moving forward, I'm quite optimistic so far.
Yeah, good points, Awit. I just wanted to touch on one subject, the small modular reactors. I was listening to a podcast recently and they were talking about this myth of nuclear energy being dangerous. And they quoted some statistics based on past record of deaths from different energies, and they measured it by terawatt hour. And what they found was the source of energy that caused the most deaths was coal, 35 deaths per terawatt hour. And then I can't remember which was next, whether it was oil or gas, but anyway, it went down to 28. And then they went on to other energies, it went down to 7. And then when they got to nuclear energy, the amount of deaths was so tiny, it was several decimal points past 0. So it was like 0.7 or something like that. So we do know that small modular reactors are much safer than the traditional nuclear reactors in the past. So I think that's an interesting point there. I think the only thing that could hold Rolls-Royce back in terms of small modular reactors is the behaviour of the government. If the government doesn't support enough, for example, they've only got a contract for 3 SMRs, and I think that's quite tiny. We could do with a lot more than that. So if government was to approve it, it would make a lot of sense. Certainly, I do know that in Germany that have moved away from fossil fuels quite a bit, the cost of their energy in their country is double that of France, which is very nuclear oriented. And the running costs in Germany for their energy system is double the cost of France's using nuclear energy. So I think they're really good arguments in favour of this. I'm just keeping my fingers crossed that the government will support this.
Yeah, definitely. I think what we've seen is there's a trend. For example, I think the SMR business, there's 38% is owned by the by the Czech Republic company called CAZ. So they own that part, and I think they are using their technology. And there was an interest from Sweden as well to, use Rolls-Royce to build small modular reactors. So there is a good trend. I think they are
Yeah.
entering in the US market as well, and they expecting this, by to go 4 times by 2050.
Yeah.
So there is a lot of interest for Rolls-Royce to get into this, building small modular reactors in and licensing as well their technology to other
Yes.
companies. So there's a lot of growth area in this phase. And remember, I was listening to, I think, Microsoft CEO recently, and he mentioned, I think they have a data center built ready with everything, but they don't have the energy to run it. So it
Yes.
shows you for this AI advancement, you do need energy. It's not just, building chips and so on. Energy is becoming critical in powering
Yes.
those data centers.
It does seem to me that we've got the perfect storm in a positive sense for Rolls-Royce, because all these areas where there's a lot of growth, like defense in Europe, data centers, small modular reactors, they're all perfect for a company like this that is in the right place at the right time. Have you got anything to add to that, Carl? What's your thoughts?
Yeah, absolutely. And like I said earlier, I think that's why they've come on our radar. Really, it's kind of looking at the future and the areas that they're getting into that are interesting. I think it's important to note that the small modular reactors, they don't provide any revenue to Rolls-Royce at the moment. They don't expect it to be profitable into the 2030s. So we are looking at a longer term play here. But it is predicted to be a $1 trillion market, though, small modular reactors. So obviously they're now in it. So that's a good thing. I kind of liken it a little bit. We did a podcast a few weeks back on quantum computing and IBM,
Yes.
and how IBM, traditional old company, been around a long time, but they have got an area of their business now focusing on quantum computing, and the potentials for quantum computing are vast, but it's still very early stage, and it's unclear on what kind of revenues they can expect from that. So it's a little bit like that with Rolls-Royce and small modular reactors. Now, the small modular reactors it is now proven technology, so it's different to kind of quantum in that sense. But yeah, we are very much looking into the future and the potential there. I think it's also worth saying, currently as it stands, Rolls-Royce, if you're buying it today, you are still essentially buying an aerospace company with a big chunk of defense, because I think aerospace is around 40% of their revenue, defense is around 30%, and then around 25 to 30 is sort of power systems, which doesn't include small modular reactors at the moment. You're still, all the revenues coming from that aerospace and defense. And interesting on the defense side, again, you could look at that. It's an interesting area to be in right now. The world seems to be becoming more and more unstable. Europe and the US do seem keen on more defense spending. So that's good news for people that work in defense. But Rolls-Royce are not a big defense company when you measure revenue compared to all other competitors. I think they're ranked 22nd, something like that, in global defense players. So they're not a big defense company compared to some of the others. So there's a lot of competition there. So yeah, it's not a given that, just because Rolls-Royce are starting in these small reactors, that's it, that's the future, and they're going to be a great company going forward. But it is interesting at this point in time where they're steering to next.
So we've talked about a lot of positives, but as usual in this show, we have to also talk about any potential downsides as well. So what do you think the future risks are, Awet, for Rolls-Royce? What are the challenges? What could go wrong?
Yeah, I mean, the wrong way would be, I think, is like they heading into this new era, right? They are execution. I think the key thing I see is execution. Management has historically not proven to execute, but the last few years we had a management, they have delivered the execution. And moving forward, are they be able to execute well and deliver good return for investors? I think that's the biggest thing. And the second one is, I think they mentioned it in the annual report, supply chain. I think the supply chain has been drag on revenue, I remember. And then they mentioned about more than or close to 200 million was, due to the supply chain issue. And I think they have to solve their supply chain issue. That's one of the two things I see for now.
Yeah, you do. But my biggest doubt, I would say, is continued good management, because they've had long spells of very poor management, probably during the spell when they were nationalised as well. I imagine that wasn't a very good period. So that seems to me one of the biggest risks. Are there any others, Carl, you can think of? Any other dangers to this company as an investment? I think we've lost Carl for a moment.
I'm here. Yeah, in terms of risks, Rolls-Royce traditionally has been a cyclical company. So, tied to kind of aviation, aerospace,
Yeah,
during recessions, not many people are going to start going on holidays and flying. So that hits their kind of business.
true.
I think, as Awit's already mentioned, the management have got these small modular reactors. The management's got to execute their strategy there. So it's not clear that actually they'll win. They'll get a ton of revenue from this area of their business. Like I said, it's not predicted to start showing profits and things until the 2030s. So there's a long time yet. Everything can change. There is that geopolitical risk. So their revenues highly tied to government whims because their defence contracts, these small modular reactors, they're all reliant on essentially government regulation, government deals, and particularly the UK. I'm sure many of us will not have much faith in the UK government to get kind of strategy and things right. So that's an issue. And also there's been legacy issues before. When in the 70s, where they effectively went bankrupt and got nationalised, a big part of that is they got a massive engine system wrong. It just did not work out. And if there's any issue with safety, or if they, in the future with planes, we've seen it before, if they get anything wrong with these planes or these engines, it's massively damages in the brand, and then all the
True.
kind of significant legal costs and things that come with that can really damage them overnight. So there are a number of risks. And then the big one, I suppose, as well, so if Arit's got more on this, is obviously current valuation. If you're buying today, bear in mind this company's already had a 2,500% rise in share price in the last 5 years. Is it the time to be buying now, or have you kind of missed the boat?
Good point. All good points. Now, one of the things I found quite interesting about their engines, you think they make these huge engines and charge a lot of money for them. You think, well, that's where they're making all the profit. But in fact, it's not the case. They're not making a lot of profit on the engines when they sell them. The profit margin is quite low. Where they make all their money is maintaining them for years afterwards. And this very much reminds me of the issue of buying a printer like these days. You can buy printers for very low prices, next to nothing sometimes. But the cost of the ink cartridges can cost you an absolute fortune, far more than the cost of the printer. So what have you got to say about that one, Awet?
Yeah, I think it's like like with technology, with software businesses, this is like a sort of SaaS business, right? Software as a service, but this is engine as a service. Yeah, I think that was the main thing historically has been. Now the new management are trying to change the costs as well to make sure the company get favorable cost overall, not just servicing the engine, but to make profit on the engine, selling on the engine. But it's a great business as well. I mean, the longer they fly the big planes, the greater the revenue for Rolls-Royce it is. I think, Carl, you mentioned about revenue in terms of valuation. In the last 2 years, the share price has gone significantly, we have to admit. But looking at the current valuation, it's trading around 16 times earning, 26 times free cash flow. And when we look at the forward earning, 37 times forward earning in terms of PE ratio, and 28 times forward price to free cash flow. So the company is not too expensive and not too cheap. I mean, you have to look at the discounted cash flow to just look at to get it together and to make a good decision. Based on discounted cash flow, which is only recently has become cash flow positive, that could be skewed because they have sold some of the business. So it's not accurate. The market is implying 12% growth. So there is a premium here you're paying, but under one condition, if management can execute, right, the valuation is not too expensive because that can come down right down. But the key thing is if they can continue to execute and grow, and especially like what we see is the diversified business, defense and energy and so on. I personally think in the long term, I think this is, it's not too expensive because we're looking at forward now, not the fee, not now. Currently, it looks expensive, but if you adjusted, the revenue would come from other part of the business, especially the SMR currently doesn't generate any revenue. In fact, it's loss making. Is expected to generate revenue by 2030. So taking a lot of things into consideration in the long term, if management execute, the valuation can reset.
Yeah, and of course, the great unknown is how much defense will they get, because America's made it public that they're going to cut down a lot on defense spending in Europe. And European governments having to increase their budget significantly because they've gone through a long period of underspending on defence. So again, part of this perfect storm, it just seems perfect for Rolls-Royce. Almost certainly it's gonna build that side of their business, which, as you rightly said, is a smaller part of the overall business at the moment.
The risk there as well, though, is, as we've seen in the last few years, and you mentioned in there, Tony, that US and Europe in particular are tending to focus on their own companies,
Yes.
with defence. And obviously the EU have kind of almost punished the UK. I think they have got this new defence panel, haven't they, or providers. They want to build this sort of European defence super fund. And I think there's still negotiations going on as to whether the UK companies can get involved in that, because I think initially they've been excluded. So that's a bit of a risk, because if the US and Europe want to spend loads more on defence, but they're not going to include UK companies, then obviously Rolls-Royce
Maybe not, but
tougher.
maybe they will, because as we all know, Keir Starmer's sneakily trying to get the UK back into the EU by the back door, if you like. So he's steadily increasing links to the EU, and so I'm more optimistic about that aspect whilst we're under Labour.
Yeah, I think in terms of defense, I think I can see like pretty much recently they disclosed they have 19 billion booking. That's 4 years of visibility of booking.
Yeah.
So in the next 4 years, they are pretty much have a good booking ahead. So
Yes.
they have been awarded greatly in the defense. So I think that's why investors are optimistic and the share price is up that much. I think this is just, there's a lot of bonuses as well. The SMR is still, is to be considered and is still to be deployed. And they have energy storage business as well. That's going to grow because, those all data centers need a lot of power and storage and so on. And I think the good point is, well, recently they have went into China, which is a big market, which is, I think they have their engine is around 20% in China. So they are growing with the Air China. I think they are having a base in China, which is one of the fastest growing businesses in the world. So they are constructing there. If they have a big share of the Chinese market, which is growing, and I think that's a good tailwind for Rolls-Royce business model in the long run, because China is pretty much, you don't want to miss the Chinese market.
No, that's a good point. And it's a huge population, of course, a huge GDP. But what I find interesting is in the engines side of the business, which is probably the largest part of the business, the aerospace business, they're effectively in what we like to call an oligopoly. There's only 3 competitors, and failing a monopoly, we quite like duopolies or oligopolies, and they're one of them. The only other 2 competitors are aerospace and Pratt and Whitney. So I quite like that as well. It's just, they just seem to have so much going for them, really, because it costs a huge amount of money to get into this industry, to build these huge engines. So it's not very easy for any other competitors to come in, really, is it, Carl?
No, absolutely. So yeah, it's a big positive for them. I think it's like a lot of these quality companies we review on here, they're probably priced for perfection at the moment.
Yes.
So that's just something you need to come to terms with if you're keen on their prospects looking forward. I mean, a lot of people, because it's UK based or UK listed company, a lot of people are saying the UK looks cheap at the moment compared to others. I'll just always caveat that, a lot of investing nowadays, retail investors invest passively through tracker funds. And if the market goes down, starting with the US, it will bring everything down with it. So if you think a UK company is cheap now, it's still got a lot cheaper to go if there is to be a market correction at some point down the line. So yeah, I think it's definitely one to put on the list.
Yeah. I mean, like Howard said, it's a bit expensive, but it's not overly expensive. Not when you compare it to some of these tech companies that have ridiculous valuations, like Tesla, for example. It's a little bit expensive, but you have to pay for quality, don't you?
You do.
But the good news is that in a typical year, share prices of even the biggest companies can fluctuate up and down significantly. There was a statistic that Warren Buffett touched on, wasn't there, not long ago, where he said that typically the share price of, say, S&P 500 companies can fluctuate by 60% in a year. So it just goes to show that if you're patient enough and you wait for the right timing, you could probably buy a Rolls-Royce at a pretty good price if there's a bit of a downfall. And we quite like there to be market corrections or market crashes. I know it might sound a bit weird to say that, but if you've got a great business and you believe in it and believe in the future and your research all stacks up, we're not worried about share prices falling. In fact, we welcome it because it means we can buy more of that great business at a cheaper price. So
Yeah,
that's my thinking on it.
I think if you look at the small energy is becoming critical in the AI space in technology, even like for everything.
Yes, of course.
In the last few years, if you see the small, I mean, the nuclear space, there's so many companies are coming in there as well. So I feel like Rolls-Royce will face competition in that space because there's a lot of technology and money going into that space because that's critical to advance AI and technology and so on. So Rolls-Royce will face the competition and they have to execute because this business is not profitable, the small modular reactors. So they have to execute there and they have to win. And then I think if management are key here to execute this and to take this forward. So far, I think the one thing I like about management is in 2023, the debt was 2 billion. Now, I mean, moving forward, 2025, the company is 1.1 billion cash positive. So they have done a lot of transformation into the business. They reduce a lot of the bureaucracy and so on. They have they made it quite lean and so on. So you just want them to be flexible and agile and execute well. I think that's the key thing. If they do that, they will lead. If they not, they will fall behind because the environment is becoming tougher and there's more money going into this space. So it's just, again, I will leave it to that. It will be up to the management execution that the company would just hang on to.
I think we get a message today, Albert. You're very keen on execution today. I hope you don't mean it literally. Anyway, guys, are there any other closing comments you'd like to make? Because I think we've gone into as much detail as we can within the limits of this show today. Any closing comments, guys? How about you, Carl? Don't say execution.
Well, when it comes to investing, for me personally, it's always about looking forward. Are you in the areas where growth is going to come from in the future? And I think absolutely, aerospace is here to stay. It's only going to improve and require improvements in speed, improvements in energy, cleaner energy. So great area to be in. Defense has always traditionally been a good area to be in and will continue to be. Countries are always going to want to defend themselves. And the trend is to become more insular now, isn't it? Countries want to take everything in-house and protect their borders a lot more. So defense, great area to be in. And then energy, your movement into energy is absolutely going to be crucial the next 10, 20, 50 years. So they're positioned in exactly the right sort of areas going forward.
Couldn't agree more. How about you, Howard? Any closing comments?
Yeah, I mean, the aerospace overall, the business model has been capital intensive. Even when you look at the margin, is always not attractive to me personally, even including the new transformation. So yeah, I mean, it's a great business to be in, but historically, I personally think the margin is not attractive enough to get into. Looking at the margin, it's just not very attractive.
Okay.
You're looking into like high margin, even though it's oligopoly, you want some companies to prove that they're oligopoly to show that on their balance sheet. And Rolls-Royce doesn't show it.
Okay. So the last question to put you two on the spot today, if you had the choice of investing in this company today, would you do it, Carl? Over to you.
Personally, it's on the watch list, but not quite at this share price.
How about you, Albert?
I'll stick to Carl's. It's a watch list, something that I would definitely put it on a watch list.
This sounds a bit boring, but I think I concur. So for the first time ever, it's 100% agreement. 3-0.
Right. Yeah.
It's like being on Strictly Come Dancing, being one of the judges. You did well today. Anyway, that brings to an end today's show. As usual, we'll have a lot of information in the show notes, including a one-page company snapshot. If you're listening to this on Apple Podcasts, please do give us a good review. We always welcome that. It does help with the viewing figures to make us more well-known and help us to invite along better guests. And all I can say is, because we're recording this just before Christmas, I know you won't get it until the new year, but I wish you all a happy new year and would welcome you back next year. We'll have a lot more interesting episodes to come. And thanks to you two guys. You've been brilliant this year, Carl and Awet. Thanks very much. So goodbye for now and have a great day.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.